Wealthy millennials are losing faith in the stock market as a way to build wealth. A recent Bank of America survey found that many are turning to alternative investments to find those returns. Here with more on that is Jeff Busconi, Bank of America Head of Private Bank Services. Jeff, welcome back to the show. So talk about the divergence in what we're seeing between some younger investors and older millennials.
Sure. And thank you. Thanks for having me. It's great to be here with you again. So we did find in our survey some generational differences emerging, and in particular, 75% of younger investors who were part of our survey indicated that they don't believe a traditional portfolio of stocks and bonds will generate above average returns over time and into the future. So that was really one of the major findings. We also found that younger investors were more inclined to have sustainable investment products in their portfolios and also wanting to have an impact through philanthropy with their wealth.
Jeff, you mentioned the fact that this group of individuals is favoring alternative investment or really finding a reason to invest there. I guess, what do you think is driving that lack of confidence when it comes to stocks and bonds?
I think I would point to a couple of factors. First, you have to remember where we're coming from a market standpoint. We've come through a fairly prolonged period of strong performance in the equity and bond markets. And of course, this year we've had considerably more volatility. So that may be causing some investors to think about investments outside of traditional investments. I also think the alternative investment universe continues to evolve. There's more and more access to alternative investments through platforms like ours here at Bank of America. And as access grows, interest may also be increasing. Remember, this was historically the domain of institutions and endowments. The last thing I would point to is, remember that this generation has really come of age during a period of extreme innovation. And so there may be a greater willingness here in this generation to embrace newer asset classes and different products.
They're also coming of age at a time where crypto and NFTs have absolutely crashed. In particular, NFTs. Has that forced them to shy away from some of those digital assets?
You know, what we see around digital, and this was picked up in the survey as well, there's a lot of innovation and development happening in that space. Time will tell how it all plays out. Within our client base, our conversations are focused mostly on education. People want to learn more about the ecosystem. They want to understand what it is, how it works.
And Jeff, I thought it was interesting as you had that crypto question in this study, looking at the discrepancy between those who thought they understood crypto well and whether they thought it would actually pay off as a longer term investment. Break down some of that for us.
Sure. Again, I think what you're starting to see in the survey, again, is generational differences among investors. And as I just said, the younger investors, call it age 20 to 40, they've come of age in a period of just extreme innovation. So they may be willing to embrace newer asset classes, non-conventional forms of investment to a degree that maybe we haven't seen in prior generations. Again, I think time will tell when it comes to crypto, and certainly the current market environment is playing into the mindset here around crypto.
Jeff, one thing that did stick out to me in this survey was that only half of wealthy parents consider their children well prepared to inherit their fortunes. The conversations that you've had with clients, just the feeling out there, why do you think that is?
Look, so I think you've put your finger on one of the critical insights from the survey. We're all aware of the $84 trillion in wealth that's set to transfer here over the next 2 decades, and yet just half of parents feel that their children are well prepared to inherit that wealth. For us, I think that speaks to a continued need around estate planning, wealth and estate planning. Our advisors, our client teams need to really be having comprehensive, holistic dialogues with families around estate planning. And it's not just the documents, the legal documents, it's conversations around family dynamics, purpose, impact, all of the factors that go into having a really well thought out estate plan.
And finally, we talk a lot about ESG investing in this space, and it's been a hot topic across the country politically as well. Statistically, what is the survey showing about the drop-off between younger people and those over 43?
So what the survey showed is about a quarter of all respondents have ESG in their portfolios. That 25% or so is driven heavily by this younger cohort of investors. Upwards of 70% of the younger investors have ESG in their portfolio. So there again, you see a divergence between the older generation of investors and the younger generation of investors. I think it's important to point out that there was a quarter of respondents had exposure, and that's double the level that it was just 4 years ago in 2018. So this is an area that's growing rapidly. And that's an area of focus, particularly for younger investors who feel that this is just a smart way to invest. It's not a specific initiative or something separate. It's yet another way to have a positive impact on the world around them.
It's growing rapidly, as is the pushback to ESG investing as well, right? Thank you, Jeff Busconi. Good stuff. Appreciate that.